Imagine a world without money. No coins, no banknotes, no digital payments. Just people exchanging what they have for what they need. A fisherman swapping his fresh catch for a bag of wheat. But what happens when the farmer doesn't need fish? That's where our story begins, the incredible journey of money. Welcome to Perspective of AI. Let's go back in time. Before money, there was barter. You gave something and in return you got something you needed. Simple, right? Well, not exactly. The barter system, while seemingly straightforward, relies on a tricky concept called the double coincidence of wants. This concept is fundamental to understanding the limitations of bartering. This means that for a trade to occur, both parties must have something the other desires. It's not just about having goods, it's about having the right goods at the right time. What if you needed a goat but only had oranges? What if the other person didn't want oranges? This was the biggest flaw, double coincidence of wants. Both traders had to want exactly what the other had. It was slow, frustrating, and often unfair. So people needed something more practical. Let's go to 3000 BCE. As societies grew larger and more complex, people began to recognize the need for a more efficient medium of exchange. This led to the emergence of commodity money, where readily available and commonly desired goods were used as a form of payment. These early forms of money varied widely across cultures and geographic locations, reflecting the resources and values of each society. Items that had value on their own, in some places it was salt, in others cowrie shells, cattle, or even grain. It was essential for preserving food, and its scarcity made it a desirable trading item. In ancient Rome, soldiers were even paid in salt, giving rise to the word salary, derived from the Latin word for salt, salarium, hence the word salary. Cowrie shells, prized for their beauty and durability, served as currency in parts of Africa, Asia, and Oceania for centuries. Cows represented a store of value, provided sustenance, and could be used for labor, making them a versatile and practical form of payment. While commodity money offered a significant improvement over bartering, it still had drawbacks. Goods like salt or cattle were perishable, bulky, and not easily divisible, making them impractical for larger transactions and long-distance trade. The search for a more durable, portable and divisible form of money continued till 1000 BCE. Metal money, the Lydian innovation. Around 1000 BCE, the Kingdom of Lydia, in what is now Turkey, introduced a game-changer: metal coins. No more heavy sacks of grain or fragile shells. Gold, silver and copper became the new money standard. The Lydians, known for their trade and craftsmanship, introduced the world's first standardized coins made from electrum, a naturally occurring alloy of gold and silver. These coins were meticulously crafted, ensuring consistency in weight and purity, which was a revolutionary concept at the time. This innovation marked a significant leap forward in the evolution of money. Before this, trade was primarily conducted through barter or the use of unstandardized metal pieces, which were cumbersome and inefficient. These early coins, stamped with images of animals and symbols, possessed several crucial advantages over commodity money. The intricate designs not only served as a mark of authenticity, but also reflected the cultural and artistic values of the Lydian society. No longer did merchants and customers have to haggle over the weight and purity of gold or silver. The standardized coins eliminated the need for weighing and testing, streamlining the process of trade. The stamped image on the coin, backed by the authority of the issuing kingdom, guaranteed its value. This assurance of value was crucial in building trust and confidence in the new monetary system. The Lydian invention of coinage quickly spread throughout the ancient world. Neighboring regions and distant lands alike recognized the benefits of this new system and adopted it. From Greece to Persia, kingdoms and empires recognized the advantages of standardized money and began minting their own coins. Each civilization added its own unique designs and symbols, reflecting their distinct cultures and values. The use of metal coins as a medium of exchange became the norm, shaping the economic landscape for centuries to come. This practice laid the groundwork for modern monetary systems, influencing how we conduct trade and manage economies even today. Governments even stamped these coins to guarantee their value, but there was still one problem. Carrying too many coins was risky and heavy. So, the world moved to something even lighter. Paper money, the Tang dynasty's gift to the world. While metal coins revolutionized trade and finance, their weight and bulk pose significant challenges for large transactions, making it cumbersome and inefficient. This logistical hurdle led to the development of paper money, a truly transformative innovation that originated in China during the Tang dynasty in the 7th century. This new form of currency was revolutionary. The Tang dynasty witnessed a flourishing of trade and commerce, fueled by the Silk Road, a network of trade routes connecting the East and West. This vibrant exchange of goods and ideas necessitated a more efficient monetary system. As trade grew, so did the need for a more convenient form of money. The traditional metal coins were simply not practical for the expanding economy. Chinese merchants began using promissory notes as a lightweight and portable alternative to heavy copper coins. These notes were easier to carry and could be used for larger transactions. These notes, initially backed by the promise of redemption in copper, gradually evolved into a widely accepted form of paper currency. This evolution marked a significant shift in the way trade was conducted. By the 1800s, the gold standard was born. Each paper note was backed by real gold stored in banks. People trusted money because they knew they could exchange it for gold at any time. Firstly, it was incredibly convenient to carry and transport, facilitating trade over long distances. This convenience was a game changer for merchants and travelers alike. Secondly, it reduced the reliance on precious metals, which could be scarce and subject to fluctuations in value. This reduction in dependency on metals stabilized the economy. Thirdly, it allowed governments greater flexibility in managing their economies by controlling the supply of paper money in circulation. This control was crucial for economic stability and growth. The use of paper money spread throughout China and eventually reached other parts of the world through trade and exploration. This spread was facilitated by the extensive trade networks of the time. European explorers like Marco Polo marveled at the efficiency and sophistication of the Chinese monetary system. They were impressed by the advanced economic practices they encountered. However, it wasn't until centuries later that paper money gained widespread acceptance in Europe and other parts of the world. The journey of paper money from China to global acceptance is a testament to the Tang dynasty's lasting impact on the world. But as economies grew, there simply wasn't enough gold to support all the money needed. In 1971, President Nixon ended the gold standard, and money became what we now call fiat currency, valued not by gold but by government trust. And then money took another leap, one that changed everything. Now, money wasn't just paper anymore. Credit cards, online banking, and digital payments made transactions faster than ever. With a single swipe or a tap, you could pay instantly, no need for cash. But the biggest revolution was yet to come. In 2009, Bitcoin was born, the first decentralized cryptocurrency. Unlike traditional money, Bitcoin isn't controlled by any bank or government. Instead, it runs on blockchain, a secure digital ledger that keeps transactions transparent and unbreakable. Today we have Bitcoin, Ethereum, UPI, and central bank digital currencies. Some countries are even working on their own digital money. A full breakdown of cryptocurrency is on our channel. Check it out, link in I button. So, what's next? Will physical cash disappear completely? Will AI control banking? Or will a new form of money emerge? One thing's for sure, money will continue to evolve just like it always has. From trading cows to scanning QR codes, the story of money is nothing short of incredible. But what do you think? What will money look like in 50 years? Will we all be using cryptocurrency? Or something even more advanced? Drop your thoughts in the comments below. If you enjoyed this journey through time, hit that like button. Subscribe to Perspective of AI for more fascinating stories, and share with your friends. See you in the next video.